Okay, section 3, verification of the accounting record. The first chapter is the trial balance. Trial balance for this chapter not much to explain because it's normally combining many chapter. The section 1, section 2, and this chapter, they may combine together. Or sometimes trial balance will combine with the chapter, the next chapter, which is correction of the error. So this is the syllabus that we need to do for the trial balance. Understand what is the trial balance, and then what is the limitation of the trial balance, and how to prepare the trial balance. Next is that there are 6 errors which is we need to memorize the term about the error in the trial balance, which is not affecting the trial balance. Okay, what is a trial balance? Trial balance is a statement of the ledger balance on a certain date. What is meant by the certain date? Certain date means that on a specific date. For example, if today is 15 February 2022, so means that only today the amount that I put into the trial balance refer today. The tomorrow or before today, all could be the different amount. That is called trial balance. The certain date. When they mention certain date, or sometimes they call it particular date. Okay. Another definition we can put into the exam. Trial balance is a list of a balance of the book or account on the certain date. Why we need to prepare the trial balance? Trial balance is help us locating the arithmetical error. What is our error they can find? If our trial balance is imbalanced, it means showing that our book or our account has the error. There is a faster way or easier way to detect whether our book have any error or not. Once trial balance is imbalanced, that means the account should have a problem. Next is that a trial balance is also helpful when we want to prepare the financial statement, because in the trial balance we have all the account balances that we list down. So debit, what is the account? Credit, what is the account? It will help us to prepare the financial statement. What is the financial statement that we prepare in our syllabus? Income statement and statement of financial position. So this is the 2 statements that we normally do in the question. Okay. Next is limitation of trial balance. Trial balance is a limitation. The reason is because that some of the balance cannot be detected due to the account still can be balanced. The trial balance still can balance. So we do not know whether the account is right or wrong. So it's not completely free from the error. Why cause the error cannot be detected? Because they are the 6 errors do not affect the trial balance. This is a 6 term: commission, compensating, complete reversal, omission, original entry, and principal. So 6 term, we'll go through the next slide to see what is the difference between the 6 term in here. First one, commission. Commission is the error happen when a transaction is entered using the correct amount. So this one is a correct amount and on the correct side, but wrong account of the same class. Same class means that it's the same group. For example, cash received from Malini credited to the Malika. Malini should be the correct account, but we go and put into Malika. Both also trade receivable. So that caused the commission error happen. Complete reversal. The complete reversal is enter when it gives the correct amount and also the correct account, but we make a wrong side of each account. Suppose debit become that credit. Suppose credit become debit. For example, cash drawing debited to the cash account and credited to the drawing account. By right, this account we should debit drawing and credit cash. But we make a wrong side. So it caused the complete reversal error happen. Omission means totally forgotten to do the recording. Means complete omitted. There's no debit, no credit. For example, payment of the wages not enter in the book. So in order to make it correct, then we debit wages and credit the cash. Original entry. An incorrect figure is used when a transaction first enter in the accounting record. What is a first enter? First enter refer to the book of prime entry. Book of prime entry, you have 7 books, which is that we make a mistake in the book that we record. That is called first recording. So when this first recording wrong, it means basically the debit credit when we transfer to the ledger will also be wrong. For example, goods sold, a good bought. Good bought on credit recorded as 1,000. So overstate the purchases, overstate the trade payable. Principal is a transaction entered using the correct amount. This is a correct amount. But, and also correct side, but the wrong class. Wrong class means that supposedly it's expenses we go to put into the non-current asset. Supposedly should be the liability we go and put into the revenue. So that is called wrong class. For example, in here, motor expenses debited to the motor vehicle account. Motor vehicle is a non-current asset. Motor expenses is expenses account. So this is principal error. Last, compensating. Compensating means 2 or more error cancel each other out. There's a minimum 2 error which is affecting each other and make the account balance off. For example, purchases account under added 100 and sales return account over added 100. So debit side become balance. The format for the trial balance, debit and credit balance. The general rule for the trial balance. This is very important. The rule for the trial balance. The rule for the trial balance is a debit. We have asset, expenses, drawing, sales return, cost of sales. Credit, we have liability, income, capital, revenue, purchases return, and the provision. There is a fix. So you need to clear in your mind when prepare the trial balance. This all the account in here refer to which section. Then only you can put into the debit side or credit side correctly. So that is a key thing. Take note for it. So example, the rule given. Now next is that sometime in the question we have the trade receivable. Trade receivable actually is a sales ledger control account, which is referred to the customer. Trade payable, purchases ledger control account, which is you're going to learn in the next few chapter, and this is referred to the supplier. So take notes that when you have trade receivable or customer or sales ledger control account, it should be in the debit side because this is an asset. Without trade payable, it will be in the credit side because it's a liability. And another thing to take notes is that when you prepare finish debit credit in the trial balance, don't forget to put in the subtotal debit and credit. Then your account for trial balance, subtotal debit and credit must be equal. Debit and credit side must be equal at the end. If your account is not equal, that means this topic, they will link to the correction of the error, which is you need to continue with the question to prepare the suspend account. But trial balance, we talk until here, then we continue in the next chapter, correction of the error. Okay, so basically now you are in the intermediate section, which is section 3 we are doing now. So we will going to continue have more recording in the future.